What's up, everybody? This is my charts. We're back again with another video. Today we're going to talk about risk management and like get into the depth of it and like know how much money you're supposed to use when trading and how much you're supposed to risk, how much you're supposed to like how much you might expect to gain, depending on like obviously depending on the capital you're willing to to invest into trading and like all that, and everything is gonna like make more sense as the video goes through. So yeah.
So, hey guys, so before we get into the video, I would want you guys to know something, right? When you guys are investing your money in your accounts, you guys should not hold any emotions to your money, because that will be a big barrier to you, right? So today we are gonna talk about risk management. So I'm gonna start with the account balance, right? So basically, you can deposit any amount of money you want on your trading account, right? Ranging from even $10, right? But I would mostly advise you guys to at least deposit from $100 to upside, right? Which will give your account more space to breathe, right? And then we'll go through risk percentage. So let's say you maybe have $100 account and your trading plan is per trade you are going to be risking maybe 5%, right? So that means you are going to be risking $5 per trade, right? And if you lose $5 from $100 account, it won't really affect you, right? But then comes what we refer to as risk to reward, right? So maybe let's say you are willing to lose $5, but you can also, if you don't lose and make the trade, you also make $15. That would be a 1-to-3 risk to reward ratio, which means that let's say you lose 2 trades, then you win 1 trade. Now you're $5 into profits, and those 2 losses meant nothing because now only 1 win covered both the losses and also gave you a profit, right? And then we are also going to be covering lot sizes, right? We have different types of lot sizes. First, we have a standard lot, right? What we refer to as a standard lot, which if you go to your app, MetaTrader 4, if you haven't downloaded it, you should download it and see it. When your size, when you enter a trade and you decide that your size is going to be a 1.0, that's a standard lot, right? When you decide that it's going to be a 0.1, that's a micro lot, right? So now you're risking less. And when you decide that you're going to be risking a mini lot, that means you have a 0.01 in position, right? So that means even lesser risk, right? But then the less risk you take, the less profit you also take, right? Obviously. So account balance. There is nothing really to say much about this because it also depends how much money you're ready to risk, right? Because remember, guys, again, once you deposit that your money in an account, that money is gone, right? Like don't be too much attached to it, because that might lead you into failing, obviously, right? Then your risk percentage, right? So I would advise most of you guys to not risk more than 5%, right? Though 5% is also a lot, but you should not go over 5%, right? Because then it will start affecting you psychologically, right? And you don't want that, because once it affects you, it will ruin your account too. Then lot sizes. For now, right? For however big your account might be, right? Let's even say you have an account as big as $1,000. Do not like stick to a mini lot, which is 0.01. So why I'm telling you guys to stick to a mini lot is because I want you guys to first feel at ease, right? Do not get into the mindset that you want to make the money immediately, right? First, focus on learning, right? And once you're good enough, maybe weeks, time by time, you'll be increasing your lot sizes. Maybe from a 0.01 to a 0.02, then the other week 0.03. Then after like 2 months, you move to a 0.1, progressively, right? So now I'll give it to Noe to follow up.
Okay, now we'll talk about, I'll simply talk about system expectancy and like what that means as a term. and what like the average we like. Okay, basically, system expectancy simply means like the average, like what you expect from your trading, from your strategy, right? If let's say you're a trader, right, you obviously have to have a system in place. You have to know like how much you risk on a daily basis, how much you gain, like how much you may potentially gain on a daily basis, right? Like your average win and your average loss, right? And that's why you first have to develop a system before you can call yourself a trader, to like be able to trade over a long period of time and like see that your average win rate is higher than your average loss rate, right? You win more than you lose, or like you make more money than you lose, right? Because you always lose money, right? That's a fact, right? So basically, it's like you have to know like what your average win is, like as like in terms of cash, and what your average loss is in terms of cash as well, right? Because can you really say that you shouldn't risk more than 5%, right? Like if you want to consistently grow your account, you shouldn't risk more than 5%, right? So if you're going to risk more than only 5%, then you should know that that 5% is, let's say for example, is equals to $5, as you said, or $50 or $500, right? And uh, and then when you win, if you have a positive risk reward ratio, like let's say a 1 to 3, then your average win should be equal to that to that risk reward ratio. For example, let's say on average you're gonna be winning. Let's say you let your trades run to the side profit, you're gonna be winning uh between if let's say your risk is $5, you're gonna be winning $15. That's your average win. If you risk $50, your win is gonna be $150. That's your average win. If you risk $500, your average win is going to be $1,500. Simple as that. Now we simply talk about moving your stop loss and we'll first talk about like take profits and stop loss placement, right? Now I'll just share my screen for you to make it more understandable. Let's look at a cleaner chart. Yeah, way much clean, way better, right? So in terms of stop loss placement and take profit placement, it's all about structure. Like it's really all about structure. Yes, some people might use you might have heard about Fibonacci or Fibonacci extensions, which I also referred to in the video I made on the trend. But it's mostly about structure. Like even Fibonacci like depends on structure. If there is no structure, then the extension for Fibonacci it's not really that relevant, right? So for example, let's say here obviously you can see that there is support, right, which has now like become resistant, right? Let's say for example you were to take this trade, you were to enter over here after this engulfing candle. Now all you have to enter the trade. Now all you have to do is place your stop loss and place your target. Right? So in terms of placing your stop loss, it's all about structure, right? Here the structure is here. Here you can see that the price has formed a triple top, right, at this resistance. So this is where you put your stop loss is simply above here, right? Simply above this. It could be like, I always recommend to put like 5 pips above structure, right? If let's say your structure is like the highest point of the structure is here, try to make it 5 pips here, because now you have more breathing room for spread as well. And spread is simply like the difference between the bid and ask line. And you always have like that's a fact that's not, and that's never gonna change. That's like every transaction you make. Right? So now you've placed your stop loss. Now it makes to set your target. Now your target all depends on what type of trader you are. If you're a swing trader, you're gonna have a larger target than an intraday trader. If you're an intraday trader, you're gonna have a smaller target than a larger target. So let's say, for example, here also you see that the resistance over here. So which could now potentially become support, right? Like as far as you're concerned, when you enter this trade, these candles were not here, right? So there was only this 15-minute candle. After this engulfing, this is where you entered. Start of the entry, or at the start of the zone, right? The zone, right? You could have placed it lower for a better risk reward, but you had a hit here. You could simply shoot back high, right? So yeah, that's about it for type of replacement. Or we could look at another example. Let's see. Or okay, let's just look at like the same example, but let's say for a swing trader. Right? Let's say you entered your trade here, and then you're a swing trader. Like your targets are obviously gonna be over here, like at these lows. At these lows here. The target is gonna be around 300 pips. Yeah, 297 pips. And these are like super great to ratio. Yes, it's not a trade that it's still a high probability trade because it's like the setup is good, but you gotta let it play out and not like play around too much with your stop loss and move it way too much, because you have to give room to the trade to like you have to give room to the markets to make market structure, right? And because that takes time. 200 pips is not gonna price is not gonna move 200 pips in one go. It's not gonna move 200 pips in one day, right? It takes like a couple of days, 1, 2, 3, 4 days, right? Now let's also talk about stop loss, moving your stop loss and exiting trades, right? So moving the stop loss simply trade, right? Trade. You're in a trade now. You choose to move your stop loss from above structure to your entry or into profits, right? For example, my stop loss at this moment is here, right? The stop loss at this moment is here. If I decide to move it to entry, like I'll just go to my MT4 and then move it to entry like this, right? Simple as that. And then now I wouldn't be risking anything, like anything but the profits I am in right now, right? Because right now it's for this specific example, it's 63 pips in profits. I would only be risking these 63 pips, right? If I move my stop loss, right? But I could also move my stop loss into profits, right? Except for example, stop loss like above these highs, like right now above these highs, right? I move my stop loss like this, right? Then if price was to come back and then hit my stop loss, I would 31 pips profits, right? So yeah, and like there are different situations where you could move your stop loss, and there are also other situations where you should move your stop loss. For example, in this specific trade, I personally wouldn't move my stop loss. Why? Simply because price hasn't formed that much of relevant structure for me to say that this is like if price is to break this specific structure, then I wouldn't it wouldn't keep going in my direction. Price hasn't formed any major structure, as you can see on the higher time frame on the 4 hour, right? Price hasn't formed any structure. The only time where you will be like, okay, price is not bearish anymore, it's only bullish for this time, is if you wish to break the structure, and then your trade will obviously be validated and you will lose. But yeah, that's pretty much it for moving stop losses. I could also give you an example of when to move your stop loss, when, like, as opposed to when not to move it. I've already shown you when not to move it. I'll simply show you when to move it. Okay, let's look at this. For example, right here, you see that support is being formed. There is also resistance here. Price is kind of in a range. The price breaks above, comes back for the retest, and then flies high. And then you enter you have your entry here after the engulfing candlestick, like this, and then you set your targets at this resistance, right? Let's say price shoots higher into profits, comes back to entry, then shoots back again. Now price breaks this high. Price forms a higher high, right? This price was forming a higher low. Bit of a consolidation here, forming an inverted head and shoulder, right? Let me just point it out clearly. Inverted head and shoulder. But then price breaks above. Here, it is reasonable to move your stop loss. You can move your stop loss as much as you like, and like move it to entry, which also coincides with this structure here, right? With the right shoulder, right? So you have you have many reasons to move your stop loss, right? Is you're gonna have less stress while you're in you're gonna have less stress while you're in the position. You're not gonna be risking anything anymore apart from the profits you have, but you haven't really like closed the profit, so they're not really lows. So you're only like messing around with profits, and then price eventually goes up to your target. Simple as that. Yeah, that's pretty much all. Also exiting trades, right? As well as exiting trades. I would say exiting trades, you simply exit the trades as you enter them. The same way you enter a trade is the same way you exit a trade. If, let's say, you took sales over here, right? Because of this support coming back in resistance. If price comes here, comes back to this level, and then forms support here, shows exhaustion, then I would advise to get out of the trade with the profit you have, because then price will show that it's not breaking this level and it has more potential to bounce with this level and go back higher, which would make you lose your trade or make you lose your profits. And yeah, that's pretty much it. So yeah, like the same way you enter your trade should be the same way you exit the trade, right? If your take profit does not get hit, right? Yeah, this is like a good lifetime example. So it's like if you're in this trade and price is to come back here, doesn't break it, like price keeps rejecting here, then you should look to get out, as well as considering the fact that price is slowly starting to break structure. Here, price from the lower high, lower high, but then going to that bottom, then breaking above. So price could simply come here and then form an inverted head and shoulder, while from this lower high, but then price forms a lower low, a lower higher low could come back here for a lower high, then keep bouncing higher, and you should look to get out of the. You should look to get out of this trade when price hits starts to reject here and forms this inverted head and shoulder. So yeah, that's pretty much it. So that's about it for risk management, and subscribe, like join this trading journey, like learn, because it's really beneficial to you. It has the potential to be really beneficial to you, like if you dedicate yourself to it for like a few years, like just a few years of your life. It's your like big changes in your life and all that. So yeah, make sure to turn on the notification bells as well. And yeah, anything to add, Kenny?
Yeah. So in the end, I'd like you guys to write down some stuff just in case you didn't write it. Write the summary of it. So make number one, make a trading plan, right? Number two, get a risk management into your plan, right? So you should know the account balance you have, right? Know the percent you are willing to risk. Know the lot size you are going to be using, and obviously the lot size and the stop loss are going to be correlating with each other, so that you know the amount of percentage you're risking. Yeah, make sure you write that down, and also know the risk to reward you're going to be using. I advise you to at least be using 1 to 2. I personally don't use less than 1 to 3, but yeah, that's all. Hope you enjoyed the video, and hope this is going to serve you well. Yeah.
Stay tuned for the next video. It's gonna be about psychology, so it's gonna be like a really beneficial video for everyone. And so yeah, make sure to tune in and watch and rewatch if you have to. So